Good morning, good morning. How's everybody doing this morning? Well, here we are again. Hey Mars, hey Tim. GoldenEye, good morning. How you doing, John? Lonigan, Raj, Jerry. It is it's another stuck day. Pretty brutal. Yesterday's short squeeze is not giving any relief yet. It's pretty bad. Overnight inventory is a bit long, and the range is just horrible, right? Our low is 45, high is 54. Hey John, how you doing? Yeah. Well, next Monday is, or not next Monday, Monday. Coming up Monday is month end and end of the month, end of the quarter. So it's pretty brutal. We have, let's just go and show you what's going on. Okay, so there's a poor high from yesterday, kind of expected. There was buy-ins yesterday at the end of the day. I was showing you guys. Um, we have single prints, right? Got a set of single prints here. Right, we have three sets of single prints in yesterday's profile. That is not, oh no, four actually. Four sets of single prints. So we've got four short positions in yesterday's profile. Hey, Mother Truck, what's going on? Oh, you haven't missed anything, John. It has been one of the most challenging trading environments for retail traders that I can remember. Um, let's put it to you this way. Yesterday I took two trades. I took two trades. I took one scalp, one little position trade, and I was so grateful to get those two trades in. And then I stopped. It was, it's very hard to trade a market. Like, let's be honest, right? You know, there are people in these trading rooms who, you know, talk a lot of horse pucky, but let, honestly, as a professional trader, nobody's going to be putting on size up here, right? The markets are, you know, every time they take out an all-time high, it's pure price exploration. So because you guys don't work in the business, you guys don't think about risk. All you guys think about is reward. So that gets people into a lot of trouble, right? I mean, here's the thing. Everybody was trying to short this yesterday or talking short. I saw it in the room. They're like, well, you know, if it does this, we could short. If this was short. I'm like, okay, you know, it's fine to short a market, right? but just short the backfill, right? Short, you know, when you find the front end of the move is over, then short, put your stop. So what you're doing effectively is when you see a seller, you sell alongside, you put your stop above where that seller is. You see a seller, you sell alongside, you put your stop there. And what that does is it gives you an out. Don't, you know, and when a market's at all-time highs, don't be stupid and try and short the top, right? That's a fool's game. Don't be a fool, right? You know, don't be the sucker at the table, right? Trying to find tops. Nobody does that, right? Well, the only people who do that are the kids who pose in front of somebody else's Lamborghini, right? Just be smart about it, right? The only reason people want to short is because they missed the move up because the move up was unpredictable, right? Yeah, and those trades I took, John, one was a scalp and the other one was an inventory correction trade on the open yesterday where I built a little position about 6 to 8 contracts and as soon as it went up, I was gone. Goodbye, right? And that's and that was it. Then I left, and then I saw once I started seeing, you know, I see first set of single prints, second set of, I'm like, oh, okay, right? Yeah, you know, because here's the thing you have to realize: this market is being taken higher. Why is it being taken higher? Well, number one is that everybody and his dog is shorting it, right? That's one reason. The other reason is that it's the end of the quarter. We're going into the end of the year. Now, people who get paid on performance get paid at the end of in January, so they want their numbers to look good. Okay? So, why would anybody sell anything now? Right? You guys don't realize it's not 1982. People don't take profits and sell stock. If you have a huge stock portfolio, you get loans against it. Then you don't have to pay taxes. And you actually get a tax break, right? So, what you guys need to do right now, and it's the hardest thing because guess what? Month end is coming. And month end is when every retail trader gets desperate because they want to pay the bills from the market, and the market's just sitting there going, yeah, yeah, I'm going to give you the money to pay your bills, right? And that's when they get you, right? Don't be desperate, okay? Desperation will kill you, right? It's almost like the market can sense it. You know how like a dog can sense when you're scared? The market can sense when you're desperate, okay? So don't make desperate decisions. Don't trade for the sake of trading, right? It's it's crazy. Look at this. One, two. There's 4 short positions in yesterday's profile that you could see. What about the ones you can't? Right? So how do we trade this? We trade less trades, less size. And sometimes you realize that business sucks, right? This is the kind of market it is. It's going to be frustrating. You're going to miss your opportunities sometimes, right? You'll be waiting for a trade, and then you go to the bathroom and you come back and the trade's gone. How can you explain how they are short positions? Sure, John. Let's start at the beginning, right? So the first short position, see, this is the one I missed here. Uh, okay. So, John, when a market goes higher, do you see this? Are you watching my screen? When B period took the high of A, anyone who was short underneath was using that as a stop. Okay? So when the market comes back to that area, right, what happens? Let's work out the mechanics of it. Buy orders. So that's why when C comes there, it can't fill those single prints, right? Then it happens again. C period takes the high of B. When it backfills back down an hour later, all the short sellers that are trapped here and trapped here come and bid the price here at the E low, right? So the market profile, right? Remember how I say, John? I don't know if you remember, but I say this over and over again, right? What is market profile? The quick things. One are poor, high, and low. The other thing are single prints. And the third thing are value area, which is cost basis, is where your stuff is priced. Those are the three takeaways from market profile that you can use in a simple manner, right? So what's important? Short positions. Single prints are show the short positions, right? Okay? Poor high shows you that sellers are competing up there. Okay? Those are the practical things about market profile. Now, you can go down the market profile rabbit hole, but it's fairly useless because you're not going to make any money off of it, right? So we use the practical aspects of market profile, those three things, poor high, poor low, single prints, quickly being able to tell where the cost basis is. So if you go and look at a market profile chart, hey Dan, right? If you go look at a market profile chart, you see the blue stuff. The blue stuff is the inventory, and you can clearly see there's inventory, liquidation. Liquidation brings in buyers, distribution again. That distribution brings in buyers just like, big lineup at the nightclub, everybody goes, stands in, up again, distribution, little sale, brings in buyers, trend up. And you can see the cost basis moving higher and higher and higher, right? So that's number one. The other thing about market profile, the single prints, poor high and poor low, right? Where sellers are trapped, where buyers are trapped, that's information you could use, right? Take everything else and put it aside for now, right? People talk about all sorts of crazy stuff with market profile, like incomplete auctions, unfinished business, and it's just all rubbish, which will not help you make any money, right? It's great to sit around if you're having a fireside chat, but in the practical real world, just use those tools that are given. I mean, we're waiting for the London Open. K period is what? 50 and a quarter to 52 half? I mean, look at the size of the half hour ranges. This is not tradable, right? There's a poor high right here, right? When I start, yeah, I would mark those out if I were If I were trading, if I was brand new, I would definitely like I'd go poor high, right? So you know that the sellers they're competing there, right? That's what causes that poor high, right? Basically, we're sitting here just waiting for a liquidation to make the price action better. It's brutal right now, and it's only Tuesday. I'm hoping for. This is the scenario I'm hoping for. I might be a little delusional. Tuesday, maybe Wednesday, Thursday, we get a little liquidation, right? Right, so we can get some short covering before month end, maybe, and then mark up going into month end. I don't know. I've never seen markets like this. This behavior is very abnormal. Right? I understand why it's happening. I just the only way to really trade this is to build positions. The way the market is right now, I wouldn't build a long or a short position. Hey, P Hunter, how you doing? You know, if you see your setup come across the screen, take it because it's not going to be a day of opportunity. You know, there's going to be one opportunity and that's it. If you miss it, ugh, right? But don't chase. And how can you chase in this kind of a market? It's brutal, right? You can't chase this, right? I was hoping after the Fed day and everything, options expiry, I was kind of hoping for some nice liquidation, some two-sided trade. We haven't got that yet, but it's only Tuesday, right? I'm an optimist, right? I'm an optimist. We'll see what happens. Yeah, there's nothing to do here. Well, so what we'll do, we'll make it. It'll be a quick session, folks. I'm not going to torture you. When London opens, we'll see if it moves anything at all, and then if it doesn't, we'll cut the session short. It's barely even moving. I don't even have my trading account open. There's your speedometer, right? So that's your time at sales. As you can see, it trades and then it stops, right? So if you open up your time at sales, yeah, I was hoping that we'd get some liquidation, that we'd get a little bit of, back and forth. Nothing. Just pure markup yesterday. What I saw yesterday, I was just like, oh, okay, All right. Right. See, look how it's trading. It trades and then it stops. Right. So if you open up a time and sales, right? Okay. First of all, let's okay. Let's go over how to assess a market that's non-tradable, right? For a retail trader. Number one is you look at the candles. Look how small these candles are. The smaller the candles are, it, the slower the business, right? Then if you're still not convinced, go look at your time and sales. Your time and sales should be flowing. It should just be moving constantly, right? See how it's just moving now? See, but it moves and then it stops, and then it moves and then it stops. Those are markets that don't have what? A lot of customers, or as you guys say, order flow, right? This market does not have a lot of order flow at this time. It's 3 o'clock in the morning in New York, and no large trader in their right mind is going to put on a big position at all-time highs built on 3 short or 4 short positions, right? You have less people participating, right? We don't even have higher margin today, do we? This is just like normal margin, right? Right? And the tape is not moving. So, oh, there's some trading. So you get an order comes in, they trade against it. Another order comes in, they trade against it, right? But there's no continuity. There's no flow. So for us as retail traders, scalpers, what do we depend on? We depend on movement, right? So when there's no movement, anyone? Bueller? Bueller? Right? There's no movement, there's no follow through. There's nothing for us to do. I can't even build a position. If inventory was short, right? What I was kind of hoping for, at the very least, I was hoping for inventory to be down here. I thought, we'd sell off in the overnight, but so many people shorted this thing yesterday at the close that there's like a perma bid at 44. I was hoping that, we'd get a sell off down here like yesterday, build a little position and sell it like that. But we can't even get that going on, right? So there really is nothing to do. And I'm not going to build a short position at the all-time high, right? Not at this hour, right? That's, you know, I'm not short biased. I'm hoping that we get some selling. But right now, so what would the smart money's asleep, right? Really simple. Yesterday was a warning. Exactly. Yesterday was a warning. Let's see. Let's see. Let's see if London has had its tea, as they say here in Liverpool. Yes. Yeah, find some market replay, right? For those who are totally dedicated to trading, go back in time, find a part of the chart, replay it, watch it, make notes. It's a very good idea, Dan, right? Um, this would be a great month then to go on holiday, right? This would be a great month then to be on holiday. Like, take off on Thursday, come back Wednesday of next week. Would be perfect, right? Fix that squeaky cupboard, get your tires, those of you in the prairies, maybe time to go put your winter tires on. My dream is to always take a holiday at the end of the month. That should be the trader's dream. Month end, year end, quarter end. The dream is to be on holidays. Every month end is a good time for a holiday. I'm a big believer in that. Now, a lot of people are like, "Oh no, you got to trade and you got to work," and like, okay, I've been doing this 33 years, right? So I'm a little worn out, right? All I'm saying is don't push it at month end because that's when people get desperate. That's when they screw up. A desperate trader is a dead trader. You know, we're business people, right? So you just have to know when to do business and when not to do business. That's all it is. And London's going to open now. Let's see if it leaves a poor high. Alexander, I think you're going to jinx us with this poor high stuff. That's the most movement I've seen all morning. It's okay. We probably will. We do have a poor high. Right? Don't we? Yeah, look, it is a poor high. Well, that was exciting. Can we get underneath 51? Everyone is shorting this thing, right? It's so obvious. There's so much shorting going on. How can you tell? Because every time the market dips, you just get a violent amount of buying coming in, right? It's just not allowed to get lower. Does anybody have any questions? I'm thinking the last quarter of the month of the year is going to be busy. So I think, you know, um, we should use this time to rest up. I will address, you know, for those in the room, they keep thinking that, the market's going to liquidate, it's going to liquidate. Um, I put in that video from that I did a few weeks ago or a few months ago about how this market just keeps going higher and higher and higher, why it keeps going higher and higher. It's the way it's structured. It's the way the business is built, right? I suggest you guys all. No, wholesale is still doing business. You see, Alexander, this is the difference between wholesale and us. So wholesale is working both sides of this box. So let's say the middle of the box is 51. Under 51, they're a buyer. Over 51, they're a seller. They're still making money, just less, because the order flow is. So the wholesalers, the market makers, are always trading. They're always at risk, right? Exactly. I would say we still have volume up here compared to this wall. Sorry, Dave, I don't quite understand. Right? Now, swing traders, right? Swing traders are always, well, I mean, they're in profit. Like if you're swing long, there's no reason to get rid of your position. When you have a low cost basis and the POC together, uh, you can think about it, Jerry, but wait till the order flow confirms it. Everybody thinks it's going to pop violently, right? Everyone's looking for that big liquidation. The problem is, John, a little history here, okay? But you're going to have to follow along, okay? No, I'm going to show you guys something. Let's go to a weekly chart, okay? Let's look at the two massive liquidations that happened. Here was COVID, okay? And here was Mr. Trump's Terminator 2 Judgment Day. You guys with me still? Okay? This liquidation, right? We went from what? Almost 4,000 all the way down to 2,700. This liquidation, we dropped from 6,300 all the way down to 4,900. Okay. When these two events occurred, the, the first time especially, in April, there was a market maker in the room with us at the time, Rad, and he and I went and we looked at the 13F filings after this quarter had ended. And if you look at the 13F filings here and the 13F filings here, you'll see that BlackRock, Fidelity, State Street, out of these companies, they didn't sell a single share. Right? They did not sell any of the big companies. Right? So who sold? Who sold, John? It was people who were long on margin. Right? People who had to, right? It's just like Ladbrokes. The guy, the lad from Ladbrokes is coming knocking at your door. Where's my money? And they take back your position here. Right? These are massive. Everybody was thinking that these liquidations were going to be the end of the world liquidations. Right? But they weren't. The market rebounded to higher highs because what we did was we flushed out the overhanging supply. Over-leveraged people, not just retail. There are a lot of large traders, John, who trade on credit. But companies like BlackRock, there's different types of players in this market. Okay? There are companies that have trillions of dollars in cash that don't need leverage, that don't need credit. So if you own 1 billion shares, it's paid for in cash. So it's not subject to liquidation. The only people who get flushed out are the margin. That's why I call these margin robberies. Because what they do is they take out all the leveraged margin players, right? And flush them into rich people hands, like really big money hands, and then the market just creeps higher, right? So that big liquidation, right? The big liquidation that we're waiting for, it never comes. It gets disguised here where people think it's a big liquidation and they get all short down here, which helps provide the bid as the market pushes higher and higher, right? That's market structure. Hey, look, we have a liquidation here. Look, we found a seller. Woohoo! Big news, extra, extra. Read all about it. That's why this market never, ever blows up in the last five, right? So, ever since the mortgage crisis, right? They changed things, they structured things, right? Because you got to understand, John, if you have a billion shares of Apple, right? Not only is that stock paid for, but it's also used as collateral. So the price of the collateral keeps getting marked up, right? So everything still works nicely. You see? I don't know when it's going to end or how it's going to blow up, right? There is, you know, like say there's accounting fraud at BlackRock. Ooh, now there that'll cause a serious market sell-off, right? You know, if you have like an Enron type event at a place like BlackRock or State Street or Fidelity, but other than that, you always have to look at who owns the stock positions. That will tell you how stable these markets are. And when you have billions of shares of stock in the hands of people or corporations that are trillion-dollar corporations, they're holding that stock for 30, 40, 50 years, right? So that's why the market's never actually, there's always a permanent bid, right? Look at that. That liquidation didn't even take us to the H stop or the overnight low. Right back to the middle, right? So then you'll see things like, look at yesterday's news, right? Ex BlackRock executive seeks 700 million for credit hedge fund, right? Because these companies are now raising hundreds of millions of dollars to target distressed credit opportunities in China's property sector, right? So it's like these new players keep coming and coming and coming in different market segments. There's so much speculative money around now. It's crazy, right? Doesn't really help us make money tonight, but at least you guys know now how the markets work. How you build a company and structure a company will affect how it trades. How you build a market and structure a market will affect how it trades. Yeah, so that's what I kind of read Bloomberg and the Wall Street Journal when it's slow. Not much else to do. Work on deals. All right, folks, I'm going to let you guys go a little bit early here. Be patient, be smart, okay? Yes, you can, John. You can. And I've got videos. If you look back in the videos, John, you can see it over and over again. I show you guys how to build positions. I wouldn't recommend it right now, right? Could always be worse, right? It'll shake loose. No problem, Trade Maker. Thanks for being with us. Okay, folks, we'll see you at 9 a.m. Eastern Time, and hopefully we woke up a seller somewhere. Thanks, everyone. Stay out of trouble, okay? We'll see you at RTH. Bye for now.